have with Jyotivardhan Jaipuria, Head of Research with Bank of America Merrill Lynch. Jyoti, good morning. Thank you for joining us. Jyoti,
good morning. Hi.
For a change, you can be bullish. Economy seems to be bottoming out.
Yeah, see, there are some positive signs in the economy in the sense that we've had a lot of bad news over the last 4-5 years. And, some of the measures we took are starting to take some shape. But I think this is going to be a long drawn out process. I don't think the economy is going to really revive in a hurry. The investment cycle is still, very weak, and that really is the crux why the economy has done badly over the last few years, which probably continues till post the elections.
Jyoti, just a point on the market mood at this juncture, because clearly seems like, whichever market participants you talk to, they're all in the wait and watch mode as to what is going to come out on December 8th. And you can see that in the FII activity as well as the volumes too. What's the sense that you're getting? Two scenarios. A, if you have a BJP victory in 3 out of the 4 states, and B, if the verdict is otherwise. How is the market likely to pan out in both these scenarios?
Yeah, one is I think the market is probably getting a bit overexcited about the 8th results, because if we see in the past, there have been many occasions in the past when the assembly elections and the general elections, which happened 6 months later, the results were different. I guess the big example was in 2003 and 2004, where, the voters voted differently in both the elections, which were 6 months apart from each other. So I don't think, this is like a real general indicator of what the 2014 election trend would be. It probably gives a bit of indicator. Second is these accounts for just 12% of the seats in parliament, so it's not like this is a huge amount of seats. So probably there's a bit of, over-anxiety on these results. But if we go back into history, what we have to remember is if we take, the last 6 elections, there always was a pre-election rally. So to that extent, the tendency of the market ahead of any general elections is to go up rather than go down. And most of it happens because people believe that once we have a new government in place, then we'll have more reforms which can really happen. So, that's like the trend which is really playing out now also.
Okay, JP Associates is once again the top traded counter, but this one today JP Associates for a change is trading with a downward bias. Syntex has moved up very smartly on Monday. There is some follow-up buying there. Syntex was at 15 rupees, from 15 rupees to 34 rupees in 3 months. The fortune surely has reversed for Syntex Industries. Dena Bank is holding on. Madhucon is also holding on. A lot of infra names of mid-tier construction companies, mid-tier banks, mid-tier pharma names, and mid-tier metal names are making a comeback. So markets are really going down the ladder now, and that is the important part, that the polarized nature of the market is changing. Jyoti, do you think the polarized nature of the market is changing or has already changed?
See, again, if we take a pre-election scenario and we assume that post-election there are going to be reforms, some of the sectors which will do well are the domestic sectors. The domestic sectors are sectors which did very badly over the last 3 years, where the focus was on high quality. So those are the sectors which are going up again in anticipation that we'll have a good election result and then a lot more reforms to follow, which will help the domestic economy improve. The other thing we have to be careful about is, the November-December impact, because this is typically the period, if you go back into history, where markets do well. December is by far the best month for markets, across the calendar year. So there generally is a lot of bullishness towards the year end. And typically the markets, don't do as well than in the first quarter of the calendar year when, people start taking a bit of profits. So that's also what we have to remember. So my view would be, there are stocks which probably will do well. There are stocks which have become cheap in the domestic space. So, you could probably buy some of them. But don't keep going down the ladder, because not everything is going to do well.
Jyoti, how does one read the macro data points which look like a mixed set? While the PMI, the CAD number has been impressive, the core sector growth has shrunk this time.
Yes, it's an economy which is still sluggish. So the economy is not really picking up. The investment cycle continues to be very weak, and that is really pulling down sentiment. In some sense, it started impacting the consumer sentiment also. At the same time, what we've had is a good monsoon, and a good monsoon means that rural income is strong. So rural India continues to be one of the drivers of the economy, And that is something which is reflecting in the data. So, if you really look at the data in detail, it still is like rural India is doing well, but the investment cycle is missing. And I think this will continue for the next 3-4 quarters also. The current account is a little different. That is where the concern was a few months ago. And then the government had clamped down on, the gold imports, which reflected in lower trade deficits. So the current account number which came yesterday in some sense is a reflection of the trade account data which we've seen coming over the last 3-4 months. The good thing is, apart from, the gold imports, which in some sense is temporary and at some point will have to be reversed, exports are showing a strong pickup. So that at least, is leading to a more sustainably lower current account and a trade deficit, which probably is going to help us.
Well, iShares is once again on a tear. It's an expensive stock, up 78% this year, and iShares now has given 3 years of consecutive positive return. Jyoti, why are autos holding on? Autos are cyclical in nature. Auto dispatch numbers are not that strong. Market share fight has gone up, but with the exception of, let's say, a Leyland, most of the other auto stocks are sitting at a new high.
Yeah, now, autos it's a sector which we are very overweight on. But it's a sector which has various segments. So there's some part of auto which is the two-wheelers, which are obviously gaining because of the rural income, and those are the stocks which have done well. Our view is that, auto is one of the best place to start, performing when there's a sector rotation, and that's been the reason we've been pushing it. Because two things. One is, as consumer sentiment changes, the demand outlook improves. Second is, if interest rates peak out, then again, this is one sector which does very well when you start seeing interest rate cuts happening. If we again go back into pre-elections, then autos has been the one sector which, in pre-election has probably been one of the best performing sectors. So again, history, is in line with the auto sector doing well.
Okay, now what is really bucking the trend? When I say bucking the trend, what is going up against the basic market? Well, Syntex surely is moving up very strongly. JP Associates is looking okay. JP Infra is up 3%, and there is constructive price action even in JSPL. Jyoti, how should one approach the beta end of the market? Because the beta end of the market is looking strong. Markets no longer hate companies which are sitting on a huge debt burden. In fact, markets are now of the view that these companies which have a huge debt burden do offer a buying opportunity because they can turn around the debt.
Yes, ultimately when you buy beta and you buy very high debt companies, you're really taking a call that the future is going to be great, because some of these companies, if they can't, repair their balance sheet, what the market is hoping is at some point the stock market does so well that there are lots of these companies which will be able to raise equity and repay their debt and so repair the balance sheet. Now for that you need a real bull market to come, and if that does not happen, then some of these companies will suffer. The other is we've seen some of asset sales happening in these companies. So, either because lenders are forcing them to sell assets, or because we have seen, some of these companies themselves feeling the heat of all the high debt which they have, and so they're trying to repair their balance sheet by sale of assets. So that's the other thing which has helped companies. But, you have to be very stock specific in some of these companies, because many of them, if they can't really do something about their balance sheet, they may, keep struggling for the next many years.
Jyoti, I know you can't talk stocks, but would businesses like a power grid, make you turn bullish, and would the FBO then become attractive?
The problem is we can't really talk stocks. So, there are businesses which are attractive, and then you have to look at valuations also and what is really, the issue in them. So, it's very difficult to really comment on this.
Jyoti, but in general, in last 3-4 months, we've not seen a lot of activity in the FPO market or in the IPO market. We've not got any fresh paper supply from government. But now that the government paper supply has started, do you think that is the biggest risk for our markets? India is a fund flow dependent market. There was no fresh paper supply and markets went up. But now fresh paper supply could, in a sense, challenge the liquidity equilibrium.
Yeah, that's very typical of markets, right? Because when the markets do badly, no supply of paper comes in, so all the flows come into the secondary market, and as they start improving, you start seeing FBOs coming, you start seeing some follow-on issues coming, and that tries to suck up the liquidity. So I think, it's a very standard cycle of the equity markets, which we are going to see again play out. What we have to remember is that the domestics have not really participated in this rally over the last many months. So, if we start seeing domestics coming back into the equity market, then that could provide some equilibrium.
What about pharma, Jyoti? I mean, off late, the kind of traction and the build-up that we've seen in the pharma space has been pretty buoyant. Is that one pocket, much unlike IT, which is going to, stay put with investors and always find favor?
Pharma is something which we are overweight on again. So, our view has been that it's, you probably have a bit of sector rotation, but there'll be challenges on the way. So we are still overweight pharma because we think, in case we get tapering in the US, you probably could see another bout of weakness in the rupee. Pharma would, help you there. Plus, of course, there are companies you can find there which secularly will see earnings growth coming through because, a lot of the domestic names are dependent on reforms happening in the economy. So a post-election scenario where the government is very active on reforms. Whereas pharma is something which is secular, not dependent on government. So to that extent, it's like a good growth story to have in your portfolio.
Jyoti, so after the outcome of state election, if Nifty goes to 6,400 or 6,500, will you be a seller there? And if Nifty goes to 6,000, will you be a buyer there?
Yeah, we don't really put out the short-term calls. So for us, it's always a struggle when people say, shall I sell at this level or buy at this level? Because for us, it is more like, where the market's really going to go. So from now to elections, our view is that, markets typically do well, and you'll have that, market scenario where markets are hoping that we have a good government and things improve. And post-election, if we get a decent government, just remember that, the economy's done badly for the last 4-5 years. So to that extent, can we get this economy moving from the bottom and starting, to trend back to mean? That's the key issue because margins are at an 18-year low. If we can get a margin reversal and we get margins reverting to mean, then, earnings could see quite a sharp recovery over the next few years in India.
Jyoti, just going by the point that you were earlier making about not being in sectors which have too much government intervention, what explains then the rally that we've seen in some of the cap goods names, Voltas, Crompton, JP Associates and the likes? Is it not just wishful thinking that a new government is going to come into power and that is going to kickstart investment / infrastructure activity in the country?
Yeah, so it is hope. There's, quite a bit of hope in the market now that once we have a new government next year, then things will start to improve. Stocks normally perform ahead of, the fundamentals catching up. So that's one thing we have to remember that for a lot of these stocks, earnings pickup is not going to happen over the next 12 months. But what is critical for the market is the trajectory changing that, can I look at earnings recovering 18 months later or 24 months later? And just now the hope is that as we get into election season and once the elections are out of the way, it will get easier for any political party to do reforms because, typically in the last 6 months of a government, very little gets done because everybody's focus is on election. Once that is out of the way, it's much easier to do reforms because all political parties don't have to bother about elections and they think of the future.
Jyoti, what is the bottom line here? Is it a good time to invest? Should one wait for a cut? Or don't go anywhere close to equities right now because the rate of change is still not clear?
So, markets next year should do well. But yeah, there are two events which will, cloud the whole market over the first 6 months. One is going to be tapering in the US and, the timing of that is like a question mark. But we expect it to come in March of next year. The other is going to be the election. But I think, investors should keep using corrections in the market to put in some money because market has not given returns over the last 4-5 years and the next few years could be better than that.